Well, good morning, everyone. Dr. Stock here. I'm going to make this a quick video because I want to give it up so that way it's up before pre-market so you can look into it for yourself, make any decisions on what it is that you would like to do, if anything, about this. But I was checking out the news this morning and I saw an article from Benzinga saying, is ARVL, ticker symbol ARVL, a possible short squeeze target? And I took a look at the price action, and I also looked into the information a little bit. I'm going to share that with you in the video today, and we'll see what I think is going to take place as a result of the information that I found. So stick around and let's get ready to rock. Alright, so here's the article, check it out. It says, is ARVL becoming a short squeeze target? Wall Street Bets sends shares soaring. I'm having trouble reading this morning. Let me zoom in on the news part of it here. So the shares are up over 11% in the pre-market. I've checked it out, and they have really been running on the news, and we'll see what happens closer to that market open. But I think that there's a rather intriguing case here, and there's a few details that I'd like to share with you. So there was a post from Reddit. I have it up here. We'll look at that in just a moment. But this kind of summarizes it for us. It says that the post by user Transify pointed out there are 9.62 million shares registered. Shares shorted while ARVL has a float of 51.7 million. And it says that Transify noted that 9.62 million shorted number did not include failure to deliver or naked shorts, which the poster said amounted to about 1 million shares, citing the Fintel data. So this is actually pretty interesting. I'll show you when we get to the volume on the charts what that looks like. Further, the post pointed out the discrepancy between the number of shares available for shorting and the actual number shorted. The poster hinted that someone has been buying and shorting 14,000 ARVL contracts per day, and the open interest is reset each day, implying the options are being exercised. So just this last part here, and then we'll move over to the actual post from Wall Street Bets. Short interest on ARVL is massive, and interested parties seem to be betting on this is private investment that we're looking at here, that they unlock soon, which means that they would dump their shares on the market, and then that would cause share dilution, dropping the price. And so if you're shorting it and you want the price to go down, that's how you'll make your money. So it says they are paying over 100% for their borrow fee and could be forced to cover if the stock gains upward momentum. They appear to be manipulating the price and buying time through options contracts. So now let's go over here, and it says ARVL, the second transaction to reset the clock. So here we can see the average daily volume of just over 2 million shares over this span of time, while we see that consolidated price. Here we get that there's about 606 million shares outstanding, with the majority shares subject to lockup and 52 million shares in the public float. So once that lockup period expires, that's when the shares can dump onto the market. So they highlight the float, they highlight the short interest, there you go, and that these shares that are shorted don't include the failure to deliver shorts that they would have, and then they go ahead and cite from Fintel about the failure to deliver, and that there's about 1 million shares per day. Let's zoom in on that. There you go. And this data goes up to May the 14th, about there being about 1 million failure to deliver shares per day. There we go. And then the next thing that they cite is the borrow rate fee, which goes up as the shares get harder to short. And you can see over time up through 614 going up to 270% for the short borrow fee rate. And so this happens whenever you have the stocks that are hard to borrow. And then they show from E-Trade 120% listed as hard to borrow. And then from iBorrowDesk is where they cite the next time that you can see the fees. And then all of a sudden a spike that we have in those fees all the way up to 270%. So more than doubling what that fee was before. So what they're saying is that there's almost no shares to borrow, and yet there's a lot of shares being borrowed or being sold short every day. And they say that doesn't add up, something's going on here, something's wrong. And right there's the question. How on earth is someone shorting millions of shares per day? Where are they finding these shares when 3 separate brokers have no shares available to short? Then they move on to failure to deliver and suspicious options activity. And then it says it looks like they've been shorting this stock for months. Let's see who is disclosing some, if not all, of their short positions. So they question how all these shorts are taking place if you go ahead and read through those, and then they give the answers in the options flow. And it says the chart below is the $10 June 18th in the money call options. Notice something 6,000 contracts being purchased every day. So you can see all of those contracts being purchased here. And then they go on to the $15 June 18th calls, so that would be for this Friday. And again, you could see the high volumes that we have there. So here they really start to make their case. Added together, someone is buying or shorting 14,000 contracts per day, and the open interest is reset each day, which means they are being exercised. And you should know that oftentimes for contracts, they're traded more often than they're exercised. For the proof of the instant exercising of the calls, here's some of the ones bought on June 11th, showing 6.81 thousand calls purchased and the corresponding volume 681,000 the exact same day and time. So right here, they point to the call option, 6.81 thousand, and here they're showing the volume, 681,000, happening on June 11th at 12:10, and here's June 11th also at 12:10. So they're buying the contract, which is 100 shares at a time, so 6.81 times 100 is 681. And then they go through and they discuss the strategy, and that the SEC calls it illegal options activity. And then they cite some of the staff observations: excessive trading or trading exclusively on hard-to-borrow threshold-less securities, large short positions in hard-to-borrow or threshold-less securities, large failure to deliver positions into account, continuous failure to deliver on positions with the continuous net settlement system, and deep in the money buy rights or married puts, use of buy rights with little to no open interest outside of that trader's activity, resulting in all or nearly all of the call options being assigned. And so this one right here is what really stands out, that they're buying when there's little to no open interest outside of that trader's activity. So that the options contracts that would surround it would indicate that there's really no, we'll say that it stands out, that it's special, that it's an extremely high interest compared to all of the other options outside of their activity. And then it also says the repetitive nature of the use of buy rights. So they go through and they do more details, and you can look through this. We'll just go right to the conclusions. It says a massive borrow rate, the second largest indicating a decrease in supply or vigorous short sale activity, huge daily short volume, failure to deliver caused by low float and massive short selling, questionable buy right activities, super tight float, and a large pump allowing for call option gamma squeeze, further trapping the shorts. So you can read this and you can take and make what you want from it, but I do want to move over to the chart, and I want to show you something interesting that we can see there. Alright, so here's the daily chart for arrival. Alright, so what we're looking at here is the daily chart for arrival, and you can see all of these volumes that we have here. Finally, a sudden volume spike in that green candle, and if we go down to look intraday, we can see the time that the Wall Street Bets post was put out there, and you can see the after hours that they made a really big deal about that, moving into the pre-market today, and currently sitting at 22:43 during these early market hours that we have. It's almost 7 a.m. When we take a look at this. So by the time I get this posted, it's probably going to be closer to 8 a.m. and before the market opens. So we actually get a little bit of interesting activity. Now normally with stocks, what you see is the biggest volume happening right at market open unless some special news hits. So when you look at today, I'll zoom in more. So right here is where that Wall Street Bets news hits, so possible short squeeze, gamma squeeze on the options. So when we look at this, that's the reason for that volume. But look at this volume here that's around 10:30. It is not at the market open. So when we look at that, we get that volume spike, not at the market open. A fairly decent volume spike that we have here, around 888,000. Big volume spike, 805,000. I'm gonna have to zoom out so you can see more of this. There we go, volume spike, 1.1 million. Volume spike, 855,000. Volume spike, 893,000. Sometimes it can be large institutional buying, but the fact that it's so consistent would kind of give credence to that evidence of what they were making for the options contracts of the buy followed by exercise. So let me zoom out so we can see a little bit more of this pattern. So look as we go back through time. So like I said, sometimes you have institutional buying that happens throughout the day, and sometimes you have catalyst news that happens throughout the day, but typically what you see is big volume at the market open, and it tapers off throughout the day as we kind of decide where things are being priced in for the current market conditions. But now we're back into May. Look at that one right there. That's 1.3 million. So one explanation as given in Wall Street Bets, I mean, it does hold up, and I'm not saying that it's the only explanation, and they are also saying that it's not the only explanation, that it's their interpretation. So when you look through these, you know, take it with a grain of salt, but they do make quite a case. I mean, look at, we're all the way back into just before the middle of May here. Let's zoom out further, zoom in a little bit, and you can see this activity that's been going on for quite a while. And actually, it may have even been, more companies or more institutions at one point in time that were going through and messing around with the stock price for Arrival. So what do I think is going to happen with Arrival? I think one of two things. One is that it's going to be seen as fluff, and we'll get a lot of downward pressure. We'll get a lot of profit taking off of these pre-market hours and off of this spike that we saw. So that's one thing that definitely could happen. Another thing that we could see happening is that this thing would end up being legitimate. And with a short squeeze could be something that would happen, especially with not that many shares available to buy in the first place. So we could see the gamma squeeze, we could see the short squeeze, and it could happen in relatively short order. We could see that happen today, tomorrow, or even by Friday, so before the week's even out. So if there really is a short squeeze case, we could see this price take off. If there's not a short squeeze case, we could still see this price take off today because of the momentum based on what we saw with Wall Street Bet. So let me summarize. There are private investors who have shares for Arrival that they can dump on the market, which would cause the share price to go down, which if there are a lot of short sellers, they would make a lot of money because of that drop in the price. So if there are a lot of shorts out there, especially naked shorts taking place, who are going to have a hard time covering their positions, they're going to be scarfing up every share that does become available, and that's going to cause a lot of buying pressure, sending the price way up. And if we're talking about a gamma squeeze, we could see such a rapid change in the shares price versus the options price, where that we get a gamma squeeze that again causes a lot of money for people who have the options in order to make a lot of money off of those options. So people are going to be pretty excited about this. We see that excitement at the end of the day, at the end of the trading day yesterday, and through the after hours and into the pre-market today. And so if this is a short squeeze target, we could see this price go through the roof very quickly, smashing that $37 per share. If it's not, we could see people taking a lot of profit right at the beginning and completely deflating the stock price, causing a rapid drop. So by no means am I saying go out and buy this because the money could be huge. I'm also saying don't buy this and be part of the movement because I would hate to see anybody compromised financially. So for me, the point of this show is financial freedom. But I also, something that I stand for is equitable opportunities in the markets. And if that's what this is about, then, I'm not going to compromise my family's financial stability over it, but I am somebody who would support that we have fair trading and a fair marketplace. And I do not support illegal activity and manipulation that would be happening in the markets. So I'm going to keep my eyes on Arrival. I think that is going to play out in an interesting way throughout the day, and I hope that some of this information that came out to you that you find helpful and that you do your own reading on it, that you take your own stance on it, or no stance at all. It's all up to you, and remember, this is for entertainment purposes only. Thank you guys so much for stopping by. If you guys want to check out my Patreon, that link is down in the description. Also down in the description, you'll find a link to WEBULL. You can sign up, deposit your $100. You'll get 2 free stocks valued up to $1,850. I get 2 free stocks for the referral. So hit the subscribe button if you haven't already, hit the like button, hit the notification bell, share this with your friends. Remember, these videos are for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.